Welcome to TradeTheMBA.com. This is John. This report is for the 23rd of November as we get close to Thanksgiving holiday. Last day of trading before we get that break. And you can see that we've just followed the EBM beautifully. Continues to rise. Shakeout continues to move in the right direction. Could see orange move out of the range right there. No real objection. We just haven't seen a major push of significant long-term buyers jump into this. We're not overbought in any way, shape, or form. Continuing is really the easiest way to describe it. Is just a standard buy from here and trail. We had a secondary move that happened right here with this blue signal, and it's just been straight up from there. We expected to get to the 2200. It's exactly where we are. And we still have that 2350 as a broader upturn number, and you can see the NQ lagging. I think that'll start to change as perceptions get altered, but as long as they keep talking about $1 trillion infrastructure stimulus, you're looking at the industrials going through the roof on that. No big shock. I mean, I've talked about it before. I mean, the books have been written. Dow 30,000 is not inconceivable from a post-war standpoint. Euro continuing to be under trouble with, all sorts of a Trump-like effect situations taking place throughout Europe, and it's going to have repercussions, not to mention that just growth policies are a disaster there. It'll be an interesting conflict between the Fed. They've been using the elevated euro to help finance some of the not necessarily stagflation for the dollar, but just to allow interest rates to stay low. It's going to put a lot more pressure on the U.S. economy as the euro continues and maintains a slide simply because of the significant number of S&P 500s that actually have European earnings. So something to bear in mind with that. And moving on to bonds, well, you know my opinion on them from way back, and nothing has changed for that. It was a ridiculous valuation there. People were just insane moving their money there. $1 trillion has been wiped out for a lot of those people, and no, still not looking any particular. I mean, fine, you're in a super oversold situation, but look at that shakeout continuing to plummet. Until that sees some kind of reversal, nothing you can do there. The false pop in oil was just that, a false pop. Obviously, we had a positive extreme. It's already been retraced thoroughly. So from that standpoint, you're still having money flowing into it. So the potential for it to continue a slight move higher is still there. Seems a little interesting given the fact that even a reduction isn't going to change the fact that land facilities and that are overloaded and they have nowhere to put the stuff anymore. That's an interesting proposition when you think you can pump it, but now you have nowhere to put it. So usually when you have that kind of supply over the top, you have lower prices. Not quite translated yet. At some point it's going to have to. Gold's going to hover around here. I would think that we're going to start to see some beginnings of elevation, particularly if there's talk about rate increase. That kind of situation should give us a little bit of boost in gold. Though things are pretty tranquil out there, so it's not really needed. So when we were back up here going into the pre-market, I mentioned, okay, fine, we're going to get our positive extreme retrace, which was going to take us all the way back. We ended up doing just that, came up underneath it, put it in a nice orange below the red, and then dipped right there with the steel below the magenta, and we took off from there right back to the highs as expected. And that's usually where you meet resistance. This was a pre-test, faded into it, and then allowed it to go right back to it. Called it very easily on that situation. Going into the holiday light, we might see a little bit more play, but generally still the bias is fairly strong to the upside or even. Now, normally these kind of holiday things even themselves out, but obviously everyone's going to be starting to think about Black Friday and how those numbers are going to look as a gauge of economic health. But I think some of that's thrown out the window with the changes that are going to take place in January. The question is going to be following senators and congressmen and their perceptions on a stimulus package, because that's going to be everything. I already got the first articles out about potential snags in that kind of spending or even tax cut situation. So we will continue to monitor that one, because that's going to certainly have more impact on the market than some of the real economic conditions, simply because they're going to lag what the perception is going to be. As always, though, could you look for me on the Skype chat? Trade well.